beat on both lines, obviously, as you've been discussing. I'm actually not sure the EPS beat is quite as big as perhaps that consensus number is. I've seen some other analysts have it a little higher. Either way, a decent-sized beat on both lines. And interestingly, it's come on pretty much every underlying department. Investment banking, 2.04 revenue. That was in line with expectations. Trading also beat 2.4. It was expecting 2.3. Investment and lending was the big area of a beat, 1.9 versus expectation of 1.1 billion revenue. Investment management, 1.7 versus 1.5. So essentially, they've shrugged off that sort of poor capital markets environment and managed to have a bit of a beat on each line. The biggest one coming investing and lending, which continues a trend. I think analysts would rather see it in investment banking or in trading, but nonetheless, decent on every single line. And the big impressive thing here is, given everybody else's incredibly weak trading performance, that they weren't dragged down more heavily by that. I think the theme of today, though, is seeing two banks beat on both the revenue and the EPS line. In the prior couple of days, we saw if there were beats from Citi or from JP Morgan, it only came on one line and not on both. And that's why we're seeing shares of Bank of America and shares of Goldman Sachs performing so well. And back to Bank of America very quickly. They kept costs under control like Citi did. They improved loan growth without having to increase provisions, which JP Morgan had to do. And yes, they saw that poor fixed income trading number, but for them, it's only 14% of the total pie, the total trading revenue. So again, that's why they were able to perform so well with their numbers.